Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at the S&P 500 today. And going all the way back to 2022, this does look like a bullish descending broadening wedge, right? And then if you pull out your 3-day RSI, it did show you that this was the bottom, right? So whenever you're within a wedge pattern or you're consolidating up and down within a channel, to know when to DCA in is when you see bullish divergence on the high time frame. And we saw that right here, and Bitcoin bottomed out at that same time. And then we had a inverted head and shoulders here, slanted inverted head and shoulders. You had a wave 1 to the upside. This was your wave 1. You have an ABC correction for your wave 2. And then I think that this was your macro 2, very quick. And this whole move over here was our wave 3 to the upside. Our wave 3 to the upside finished in December of 2024. We'll actually drop down to the daily time frame here just so you guys can see the wave count a little better. And then we had an ABC down here, right? With an extension within the fifth wave. So a three down in your A, 3 up in your B, and then a 5-wave move to the downside within your C. But this wave 5 was extended, and you can see how extended it was with the Trump and tariff situation, right? You see this gap down over here? How many gap downs you had? Gap down over here, gap down here, over here, right? In the thick of it, it looks like it's pure panic and capitulation, and that's what it was. That's usually what you see within wave 5 extensions. So yeah, I'm thinking that now that we're above the 200-day moving average, this was just an ABC correction. And as long as we stay above it, then we're going to be targeting 63, 64, and 66. Now, instead of taking a look at it so linear in a sense where we think it's going to top out there and then go into a bear market, instead of doing that, it could just come down and form another range, right? And just form another range and then top out. We'll see how it plays out level for level, but these are the two levels I'm eyeing. Okay, we can even see that NQ. So we can even see that NQ is above the 200-day moving average as well. Yeah, so this is just NQ. If we take a look here at the 6-hour time frame, we can see all the waves here. This was your third wave. Right here. Same thing as the S&P, bullish descending broadening wedge. Wave 1, wave 2. And I think that we were in our wave 3 this whole time. So your wave 1, your wave 2 of 3. Your wave 3 of 3, 4 of 3, and 5 of 3. Then you come down for a flat pattern for your wave 4 of 3, and then for your wave 5 of 3, you have an ending diagonal with a wave 5 throw over, just like that. And then you have your ABC correction down, a 3 down in your A, 3 up in your B, and then a 5 down in your C. Current overhead resistance would be sitting right at 21,292 at the 786 retracement. Once we get over that level, then we'd be targeting this supply zone right here. Okay, at 21,835 and 22,317. Now I am targeting another wave up, a new all-time high on NQ. We'd be looking at 24,470 and 2,500, simply because that's the 2.382. When we take a fib from the 2021 high down to this low, same as the S&P 500, and also because that's the, let me see here, that's around the 1.382 extension when we take a fib from this high down to this low. Okay, so just to simplify this, I would be expecting a top to come in at any of these colored levels here any of these colored boxes that I drew here. Now the Russell 2000 is making its way back towards the 200-day moving average. We're currently trading above the 50% fib, as you guys can see. We have traded right down to the 886 fib, filled this gap. So taking a look here on the daily, you see this gap on the gap on the Russell that was left all the way back from November 2023. Well, we actually filled that gap right here. You see how you filled it? You not only filled it, but you came down to the 786, 886 region, and then you see a pop up right here. Okay, so now the current overhead resistance is, of course, the 200-day moving average, considering we're still under it. But yeah, it's this 50%. This 50% fib and 618 for now. Once you get above these two levels, then we would be we'd be targeting these highs. Because don't forget, this is still our supply zone right here. Right over here. Okay. On the Russell 2000, we also have equal high buy side liquidity. So considering we have equal highs here, there's liquidity trapped above these highs, kind of like ETH, right? Where ETH had ETH has equal highs here. So we're gonna go get that liquidity. Okay, this is your EQH, BSL. And there you go. So hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. The next point of interest on the S&P 500 would be sitting at 63, 64, and 66. You know, Trump said himself to go out and buy stocks, and the last time he said that to go and buy stocks, you know, we actually added over $10 trillion to the market. I think it was this candle right here. Taking a look here on the weekly time frame, we did call the bottom on the S&P, or the reversal. This was the piercing line reversal candlestick, and you can see it's more significant when you take a look at the Heikin-Ashi candles. See, if we take a look at the Heikin-Ashi candles and just delete everything on this chart, you guys can see we pierced the low of the previous week, and then you close back up over 50% of the previous trading week's range, right? Then you have a doji, another doji, and then continuation, or three white soldiers. So this is a three white soldiers candlestick pattern on the Heikin-Ashi chart in a classic V-shaped recovery. But yeah, that's the S&P. Everything is looking good. Hope you guys enjoyed the video. If you want to stay updated, then click the link in the description below to join the Discord. Peace out and take it easy. See you in the next one.